Assalamualaikum warahmatullahi wabarakatuh to Sir Sophie and my fellow friends. Today, we want to present our group project FAR 340, which is Financial Ratio Analysis for the company that we choose are Sumatec Resources Berhad.
So, what is ratios? Ratios are points of reference between businesses inside a market. They measure stocks. Similarly, they measure a corporation against the historical figures today. In most situations, knowing the driving ratios of factors is also essential, as management has the ability to adjust its approach at times to make its portfolio and business ratios more appealing. In addition, ratios are not usually used in isolation nor in conjunction with other ratios. So, what ratios that use in this analysis? We will use three ratios, which are liquidity, leverage, and profitability. We will, we will also use a common size ratio to get a clearer overview of the organization. In order to draw concrete results, they need to be discussed over a certain context as compared to several businesses working in the same market. Common size ratios are more accurate. Background of Sumatec Resources Berhad. Sumatec Resources Berhad is a company that engages in investment holding and upstream oil operation. The company focuses on the development of underperforming oil and gas assets. It is founded on 22 April 1979 and incorporated as a public company. The company also was listed on the main market of Bursa Securities on 8 September 2003. Right now, Sumatec Resources Berhad was appointed to carry out the operations relating to the production of hydrocarbon from the Raku, Shej, Noye oil and gas field, as well as the provision of a gas development, implement and production plan for the same field, which forms the crux of the company's business turnaround strategy through the JIA entered into between Sumatec, Mail and COG on 8 March 2012.
Hi and Assalamualaikum. My name is Umi Kausum binti Muhammad Ghazali and today I will be presenting the Sumatec Resources Liquidity Ratios. For the first ratio, which is the current ratios, the company current ratio is 0.06. It is lower than the industry average because the company are facing a hard time to meet its short-term obligations. Next, for the acid test ratios, Sumatec Resources Berhad acid test ratio is 2.33, that is above than the industry average. The company is able to pay its current liability on time without liquidating its inventory. Okay, next, for the leverage ratio, which is the debt ratio for the company is 47.55%, that is above than the industry average. This is determined that the company can easily borrow money from the creditors because their creditor trust that they will be paid back in full. For the net ratio, which is debt to equity ratios, Sumatec Resources Berhad debt to equity ratio is 90.64%, that is under the industry average. The company used more borrowings and less equity as its source of financing. And for the last ratio, under leverage ratio, that is time interest earned, the company time interest earned is negative 1078.4%, and the company time interest earned achievement are under the industry average. Fewer earnings are available to meet interest payment. Okay, for the profitable ratios for Sumatec Resources Berhad, which is gross profit margins, the gross profit margin ratio is 91.27%, that is above the industry average. Sumatec Resources Berhad is efficient in controlling its cost of goods sold and its expenses. For the operating profit margin, which is 18.76%, that are also above the industry average. This is because the company return on every sale made is high. And for the next ratio, which is net profit margin, the company net profit margin is negative 8.85%. That is under the industry average. The company is lack of sale where the sales amount is declining. Alright, still under the profitable ratios, the next ratio is return on asset ratio for Sumatec Resources Berhad, that is negative 4.21%. The return on asset ratio for Sumatec Resources Berhad is under the industry average. This is because the company is continuing experience loss on each ringgit of investment. For the last ratio, which is return on equity ratio, the company return on equity ratio is negative 7.65%. This is also under the industry average because the Sumatec Resources Berhad shareholders are losing rather than gaining value on their investment in equity of the company.
Hi, I am Nur Nazrahnada binti Japri. Now, I will show you about the common size ratio for non-current assets from the Sumatec Resources Berhad SOFPI for 2017 and 2018. For non-current assets, property, plant and equipment for 2017, there is 0.09%, while in 2018, there is 0.06%. For rights and concessions, in 2017, there is 46.19%, while in 2018, there is no rights and concessions. Moreover, for trade receivables, in 2017, there is 3.63%, and for 2018, there is 4.18%. For other receivables, in 2017, there is 34.93%, while in 2018, there is no amount of other receivables. Next, amount due from subsidiary companies. In 2017, there is no amount, so that is no percentage. While in 2018, there is 92.97%. For the total non-current assets for 2017, there is 84.84%, while in 2018, there is 97.21%. Next, for the non-current liabilities of these companies, there is one item only, which is deferred tax liabilities. The amount for 2017 and 2018, there is same, which is 105,000, and the percentage will become 0.02%. Okay, I will continue with the analyze the trends in the company performance. In non-current asset, the property, plant and equipment has decreased by 0.03%, which the company should utilize long-term debt to purchase additional PPE so that the company can increase their operations in producing their products to large earnings. For the rights and concession, there is decrease by 46.19%. A concession may include the right to use some existing infrastructure required to carry out a business. The short-term concessions may be granted as promotional space for periods as short as 1 day. For trade receivables, there is an increase by 0.55. An increase in the trade receivables amount may mean a company has sold extra product during a certain period, or that they are not getting payments for invoice in fast enough. For other receivables, there is decrease by 34.93%, which means the company is to recover the royalty payment solely from production costs and also included in deposits of the company being refundable deposit paid for the proposed acquisition. For amount due from subsidiary companies, there is an increase by 92.97%, which means when money for goods or services is received by a subsidiary and is on its way to being forwarded to the parent company, the separation of funds is particularly useful when disbursements are scheduled for payments. The process of separating receivables and payables also helps in tax charges as movement in and out of due from accounts. And the last one for non-current liabilities, which is deferred tax liabilities, there is no change because a deferred tax liability represents an obligation to pay taxes in the future. The amount that company had to pay for income tax is same for every year. That's all
In
from me.
conclusion, if we look at the leverage ratios and profitability ratios, both ratios show a sign that the company is having a hard time. Sumatec Resources perhaps use more borrowings and less equity as its sources of financing, which is a little bit risky for Sumatec Resources perhaps since it has higher proportion of debt compared to equity. Next, for time interest earned ratio, it has lower than industry average, which shows that this company provide higher risk and could force the company into bankruptcy. As for profitability ratios, we can conclude that all ratios under profitability ratios show this is in a poor condition because they have a low level of sales. Lastly, for the common size ratios for Sumatec Resources Berhad, liabilities are the same as there is no changes between 2017 and 2018. It shows that the company has the same amount of liability for every year. Sumatec Resources Berhad is having a not so good result in the year of 2018, but they can improve their performance or their net profit with increasing their sales and decreasing their expenses or liabilities.
That's all from me. Thank you for watching and listening to our video.